right, welcome back to Nadlin Forum Podcast Daily, everyone. I'm Ruby, and Lior, you're looking extra sharp today. Did you get a little haircut for Mortgage Week? Or is it just the lower rates making everyone glow these days?
Ha! Just the rates, Ruby. I think my hairline is receding like inflation, not improving. But no, for real. This week's numbers are wild. The Mortgage Bankers Association's latest data show a seasonally adjusted surge of almost 30% in total mortgage applications. And that's just compared to 7 days ago? If you don't adjust, it's more like 43% up, which is just wow. The phones have not stopped ringing.
It's bonkers. There's a full-on rush happening, and honestly, most of it is refinances. Refi applications jumped by 58% over the previous week, a whopping 70% up from last year, all because the 30-year fix dipped to 6.39%. I even had a mate in Melbourne, total spreadsheet nerd, text me last night basically doing a happy dance. He locked in a refi and dropped like $200 a month instantly on his payments. He sent me a screenshot and everything, classic finance guy. But you can see why everyone's moving fast, right?
Exactly. We've talked about this before. People waiting on the sidelines hoping for the right moment. When that 30-year fixed fell from 6.49% to 6.39%, it was like someone rang a bell. The biggest activity is with those larger loan sizes too. Folks with big mortgages. They're leading this trend, pushing average loan amounts to the highest in the survey's entire 35-year history, which is honestly kind of wild. It's that immediate impact. Drop in payment, big monthly savings, why wait?
And even purchase applications, which maybe felt sluggish, are edging up. Little boost, but it's there. Like you can almost hear a collective, maybe now's the time, from folks eyeing their first home. Totally different vibe than the doom and gloom headlines from earlier this year. Love seeing people get a chance to reset their finances, even if it's just a bit.
The crazy thing, Ruby, nearly 60% of all applications were for refinances in this report. That's huge. And those loan sizes, again, people refinancing are not messing around. We're talking record-setting averages, but I want to talk about ARMs for a second. Adjustable rate mortgages. Those are up to 12.9% of applications, which, get this, is the highest since 2008. It feels like deja vu, but with a safer twist now.
Yeah, can you explain that safer twist? Because I remember ARMs getting a bad rap back in the day, like total boogeyman territory. Are they really different now?
Good call. Back then, a lot of ARMs had scary features. Super short fixed periods, big payment shocks. Now, most are 5, 7, even 10 years fixed up front, so less surprise. And right now, ARMs are coming in at about 75 basis points below the 30-year fixed. So say you're looking at 6.39% on a fixed, you could be at 5.6%, even lower on an ARM. That's real money for the right person. Had a client here in New York, investor type, refinanced into an ARM recently. Freed up, I think, almost 60 grand in annual cash flow. Used it to go grab a second property as soon as he closed. Strategic move. But you gotta know what you're doing, of course.
See, that's wild, and it's like a legit strategy now, not just something folks resort to when they're desperate. Even when we were talking about refi booms on the show before, ARMs barely came up. But this time it's more like savvy borrowers treating ARMs as a tool instead of, a gamble. The other thing I noticed, people with bigger loans are flocking to these options. Makes sense because, even a little rate difference scales up when the loan's huge. But it's not just investors, right? First timers are getting curious too.
Yeah, you're right. It's not just seasoned investors. If you're a first timer, you want to stretch your budget. It's tempting. I always remind people, ARMs need a plan. They're not for set it and forget it types. But in this rate environment, I get why people are looking beyond the plain vanilla options.
So let's zoom out and talk about why all this is happening now. Because rates dropped, but the real trigger was the Fed, right? First rate cut of 2025 shaved off 0.25%. It's like the market's been holding its breath and now it's exhaling. just a little.
Yep, the Fed cut its benchmark. Officially, for the first time this year. They said it was about economic uncertainty, unemployment softening, inflation still a bit sticky. So they're trying to keep things from stalling. And what happened? Mortgage rates fell fast, and everyone moved off the sidelines. Purchase applications up again, about 3% for the week, and a solid 20% higher than last year, which is honestly a big turnaround from what we saw in the dead of winter.
And it's not just one loan type seeing a boost either. FHA loans, bit of a dip, but they're still about 16% of all activity. VA loans actually ticked up a bit too, so people are mixing it up, right? But the big question, should buyers rush in now or wait for more Fed moves? I always waffle on this question. It feels like timing the market is, a recipe for headaches. But what do you think, Leo?
Look, I might be repeating myself. I always say, if the math works for you and you're ready, don't try to outguess the Fed or the market. It's like we covered 2 episodes back when we talked about timing around Fed announcements. You want to act before everybody else does. And especially for first-timers, if rates make the home you want affordable, today sometimes you just gotta move. Because let's be honest, Fed could cut again, or maybe things could turn the other way fast. There's no crystal ball.
Totally. And if you missed our last episode on locking rates ahead of Fed meetings, by the way, I'm not above a shameless plug. Give it a listen. But yeah, I think the theme right now for buyers or refi folks is window of opportunity, but it might not be wide open forever. Stay watchful, be ready to act, and maybe, just maybe, find a friend who'll text you their new payment so you can celebrate. Or at least get a little FOMO working in your favor.
All right, Ruby, that's a wrap for today. Everyone, keep your eyes on the rates and don't be afraid to ask questions. We'll be back to break down whatever twists next week throws at us.
Thanks, Leo. Have a good one, everyone, and we'll catch you soon on Nadlin Forum Podcast Daily.
Bye, Ruby. Later, everyone.